So Titan reported its Q4FY21 numbers last evening, and surely, as expected, it was a strong set of revenue growth that the company did see coming in, and this was given even in the Q4 update. So when you look at the revenues did come in at 61% revenue growth that we did see coming in this time, and it is around 7,135 crores revenue what it posted in this quarter. Now in terms of revenue, yes, they were in line with the estimates, while profits and the operating margin seem to be slightly below the 18-hour expectations. But all in all, they were still a good set of numbers. So profits grew by around 48.2% and came in at 529 crores, while the margin saw a contraction and came at 11.1% versus 13.6%. So surely a sharp contraction that we did see coming in the margins. Segment-wise, obviously, a jewelry segment which accounts to more than 80% of the revenues, that grew by 71%. And the main growth that was led in the jewelry segment was by the wedding jewelry, which actually has driven strong growth for the company during that period. So surely strong growth seen by the wedding jewelry in this wedding jewelry segment, and we had seen some pent-up demand in Q3 and Q4 as well. So surely strong demand coming in over there. All in all, watches segment, as expected, was flat growth, while the eyewear segment saw a 17.6% growth on a year-on-year basis for the company. Talking about the margins, now what did impact the gross margins of the company, and this was highlighted by the management in its con call as well, is that gross margins mainly impacted by higher bullion sales, and bullion sales, when this is a low margin sale, so that surely does impact the gross margins as well. So higher bullion sales, lower studded ratios, as well as custom duty reduction in Feb 21, so that led to a loss for the company. So that is where the gross margins of the company were impacted. Now all in all, the management also said that in April 2021 was marginally better than April 2020. Obviously not as good as before, but yes, it was marginally better. But then obviously we were hit by the second wave of the COVID, but in this beginning they had seen good traction coming in over there as well. Another important highlight was what is that tier 2, tier 3 cities are still continuing to lead the growth, and urban centers still remain weak. While geography wise, if you look at it, the management did highlight that East and South India was led the growth, while West and Delhi side, that is mainly the North side, is quite subdued and was impacted. So that is something that we should be keeping an eye out on as well. Overall, the studded share was at 30% versus 37% on a year-on-year basis, while the gold coins was at 5% versus 3% on a year-on-year basis. Surely, as of now, the company stores 26 Tanishq stores, added 26 Tanishq stores in FY21, and quite an interesting set of numbers coming in from Titan this time, though we did have the impact, the benefit of the low base as well. But even despite the low base benefit, the company has performed quite well, even if you discount that low base. So all in all, a decent set of numbers coming in from Titan.